Let's take a look at the key business stories for the week ahead. Earnings season is in full swing in Japan. Several of the country's biggest companies are set to post their financial results. On Monday, Mitsubishi UFJ Financial Group reports on its April to June performance, and Toyota Motor follows on Tuesday, and SoftBank Group on Thursday. This edition focuses on the changing earnings environment for Japan's financial groups. On July 13th, Mitsubishi UFJ became Japan's most valuable company by market capitalization, overtaking Toyota. This is said to be the first time in 4 decades that a financial institution has topped the rankings. Mitsubishi UFJ is not the only bank flying high. 2 industry rivals appeared in the list of Japan's top 10 companies by market value. Sameshima Toyoki at SBI Securities says the sector has benefited from the Bank of Japan's shift away from negative interest rates. Tighter monetary policy gives banks room to charge more for loans.
The BOJ's change in its policy interest rate has had very significant consequences. The rate hikes have greatly improved the profit margin for lending money, contributing to the improvement in banks' profits. This environment where interest rates return to positive territory has allowed banks to regain their earning power.
When the BOJ raises its policy rate, banks can earn more from the gap between what they pay on deposits and what they earn on loans. This is fueling expectations for strong profits. When Japan's bubble economy collapsed in the early 1990s, banks were burdened with massive bad loans. Years of ultra-low interest rates also made it difficult to increase lending rates and weighed on earnings. Today, banks are entering a new era due to the widening rate gap. Sameshima says they are also profiting from strong demand for loans.
There is very strong demand for funds from businesses who face higher operating costs amid inflation. Companies also need funds for capital investment, including equipment renewals and efforts to deal with labor shortages. On top of that, financing needs related to business restructuring, such as mergers and acquisitions, are growing rapidly.
Sameshima expects earnings momentum to continue, supported by future rate hikes and solid demand for corporate financing. At the same time, he warns of risks from overseas.
There are risks of a slowdown in the global and Japanese economies if supply chains are disrupted due to conflicts in the Middle East and elsewhere. Such a downturn could limit the scope for further rate hikes and reduce potential for growth and interest income.
Sameshima says now is the time for mega banks to diversify their businesses. That means expanding fee-based services for corporate and individual clients, including corporate restructuring and wealth management. The real test for Japan's lenders is yet to come. Sameshima says they will only show true strength when their business strategies no longer rely on rising interest rates. I'm Gene Otani, and that's this week's BizPicks.